Hey everyone, welcome back to Corporate Decoder, the place where we decode the financials and find the actual story behind the numbers. If you think financial reporting can't be exciting, then stick around because Glaukos just dropped some interesting numbers. And as always, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Join us there for more detailed discussions and to connect with fellow corporate geeks. Glaukos is a company that makes medical devices and drugs for eye diseases like glaucoma and problems with the cornea. They're trying to find new ways to treat these eye conditions, especially with treatments that don't require repeated eye drops. They've been around for a while, launching their first tiny surgical device for glaucoma back in 2012. They also have a drug for a rare condition called keratoconus. More recently, they started selling a new product called iDose late last year, which is a tiny implant that releases medicine inside the eye over time. Today, we are diving into their second quarter financial report for 2025. Let's start by looking at their financial health right now, comparing it to the end of last year. Glaukos has about $100 million in cash and another $174 million in short-term investments. That's a lot of money on hand, which is good for a company investing heavily in new products and research. Their accounts receivable, the money customers owe them, went up quite a bit to around $83 million. This increase is mainly because they are selling more of that new iDose TR product. This product has longer payment terms, which means they get paid later, and it's important to see if they can collect this money efficiently. Now let's talk about how much money they made and spent. For the 3 months ending in June 2025, their net sales were about $124 million. That's a good jump of 30% compared to the same time last year. This growth is driven by increased sales of their iDose TR product, especially in the US for glaucoma. However, their expenses also went up. Selling, general and administrative costs, which include things like marketing, sales staff, and office expenses, jumped by 26% to nearly $83.5 million. A big chunk of this increase, about $5.5 million, was due to higher stock-based compensation for their employees. Likely because some performance goals were met, their spending on research and development also edged up by 6%, showing their continued commitment to innovation. Despite a significant increase in sales, the company still ended up with a net loss of about $19.7 million for the quarter. While it's an improvement compared to last year's loss of over $50 million, it's still a loss. This shows that even with growing sales, they are investing heavily in their future. Looking at their cash flow for the first 6 months of 2025, Glaukos used about $11.5 million in cash from its operations. This is better than the almost $52 million they used in the same period last year. However, the big story here is that while their net loss improved, their cash used in operations actually got worse by more than $40 million from last year. This is largely due to increases in inventory and accounts receivable, especially linked to the iDose TR sales. It highlights the challenge of managing cash when you're growing and launching new big products. On the investing side, they spent roughly $117 million on short-term investments in the first half of 2025, and they also bought some real estate for about $16.6 million. This shows they are actively managing their cash, putting some into investments and also investing in their own facilities. This heavy investment activity meant their investing activities used up about $57.7 million in cash. Remember, this is on top of the cash they used for regular operations, which is why their overall cash balance decreased significantly. In fact, their total cash reserves decreased by almost $70 million in the first half of 2025. This is a big drop, and even though they have a healthy amount of cash to begin with, it's important for them to manage this outflow carefully. A major event in the last quarter was their acquisition of Mobius Therapeutics. This deal cost them about $12.4 million in cash, plus they agreed to pay up to $80 million more based on whether Mobius's products hit certain sales targets. This acquisition adds a new drug called Metozil to their portfolio, which is used in glaucoma surgery. The value of the assets and liabilities they acquired from Mobius was about $24.5 million, with goodwill making up a small portion of that. It seems like they are focused on acquiring specific technologies and products that fit their strategy. Interestingly, Glaukos managed to exchange a significant amount of its convertible debt for company stock in June 2024. This means less debt on their books. They were also involved in unwinding some related capped call transactions, which are basically financial contracts to limit potential dilution from their stock. Now let's talk about the risks. Glaukos itself highlights that the success of their iDose TR product is not guaranteed. Things like how well doctors adopt it, whether insurance covers it well, and how easily they can produce enough of it are all crucial. They also mention that global economic issues like inflation and supply chain problems are still a concern affecting their costs and sometimes leading to delays. They've also faced challenges with government reimbursement policies, especially for their MEGS products, which some insurance providers have restricted. A major risk they point out is any disruption to their manufacturing or supply chain. Their main production and research facilities are in California. A natural disaster like an earthquake or even losing insurance coverage could seriously impact their ability to operate. They also rely on a few key suppliers for their products, so any problem with these suppliers could cause significant delays. They've also been upfront about their history of losses and that their results can be unpredictable. They've accumulated a large deficit, which shows how much they've invested over the years. While they've had profitable periods, reaching sustained profitability is still a challenge. They plan to fund operations with existing cash and any cash from selling stock options, and they might need more funding in the future. Now, looking at these results more broadly, Glaukos is definitely in a growth phase. They're showing strong sales growth, which is promising, especially with their new iDose TR product gaining traction. However, they're burning through cash quite rapidly to support this growth, which is a double-edged sword. On one hand, this investment in R&D and new products is crucial for their long-term success. On the other hand, they need to carefully manage these outflows to ensure they don't run into liquidity issues down the line. The increasing accounts receivable and inventory suggests they are building up stock for future sales, but it also ties up working capital. The key for Glaukos will be converting this sales growth and product development into consistent profitability and positive cash flow from operations. They have a solid foundation with their existing products and are clearly betting on iDose TR and future pipeline products to drive that profitability. Alright, that's our breakdown of Glaukos' latest financial report. What's your take on these numbers and what they signal for the company's future? Do you think they can turn those sales into profit anytime soon? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. And hey, don't forget to join our Discord community. It's the place to be if you want to chat about these companies live. Thanks for watching. See you next time.